Hey there, this is Nick from Income Digs, and we are talking today about flips, real estate accounting, dealing with flips in QuickBooks Online. A very common question that I get from my students in my end-to-end course, Real Estate Accounting Bootcamp, is how do we treat our flips? Do we put them on the profit and loss? Do we put them on the balance sheet? What about tax time? I want to answer that question today, really dive deep into the different scenarios, how to make that move between the two, and really get this question answered once and for all. If you want to check out the bootcamp, it's available with a link down below with a coupon. If you want free training, we have a QuickBooks Online mini camp that we just launched as well. Check that out, completely free, over 2 hours of awesome content, really, really awesome. But let's get into it. So we're talking about flips and what to do with them. Okay, so when we flip a property, we buy it, we renovate it, we hold on to it, we spend all that money, right? And then we eventually sell it. Okay, and then we should have a P&L for that whole thing. We eventually want that flip to land in our P&L. Okay, that's always going to be our goal. The question really is like, well, what happens at different points in time? We want to also make use of projects. So if we're using QuickBooks Online Plus or beyond, we can make use of the projects portal. I'm going to demonstrate that today. It's really great, especially for flip projects. But we might want to transfer to our balance sheet for two specific reasons. One, year-end tax prep. Okay, we're going to talk about why we don't want to show a gigantic deduction for our P&L if we haven't sold it yet, if we haven't made any revenue on it yet. And second, how we can make our reports look, quote, more accurate so that you have a better view of your business as a whole. Okay, so we're going to get into that. Now, when we think about how to get into this, and I'm going to demonstrate this today as well, we want to make sure we have all the accounts available. So within the P&L, we're going to have our sales account, we're going to have our cost of goods sold account, and we're going to have mirroring accounts in our balance sheet. We're going to treat those as inventory. I'll show you that. And then we're going to talk about how we utilize projects and classes if you have the ability to do so. I'm going to show you exactly how you can do that and the benefits of doing that. So let's get into QuickBooks and talk about it. So what I'm going to do to demonstrate this, I have this flip up here, this IDE Rehab Investment Analysis. If you want this tool, by the way, it's available for free at our website, incomedigs.com. But I'm just going to use this to demonstrate. We're going to buy this property here, 264 Union, and I'm purchasing it for $250,000, and I'm going to rehab about $150,000. Hopefully I sell it for about $625,000. I'm not going to get into this analysis right now. I'm just kind of giving you the highlights. Now, to do this so it shows up as its kind of its own transaction, I'm recording this video in late 2023, but I'm just going to pretend that we're going back in time to 2018. Okay, so let's do this in QuickBooks. And again, to show this, if I go to a balance sheet as of 2018, it should be pretty much blank. Yep, pretty much blank other than I have some cash. Okay, so I personally invested some cash with my other partner. We invested a total of $500,000. So this is an example of like the business just got started. All that's in there is cash. I know, probably way too simple than reality, but I want to make sure we are getting this example across clearly. So let's record the purchase of this property as a very first step, okay? So as you probably know, if you watch some of my videos, any big transaction, purchase, sale, or refinance, we're gonna wanna do a journal entry. We have some videos about making the purchase and recording this journal entry. So for that reason, I'm not going to spend too much time in the details here, but check that out if you want to. We have a kind of some revised videos on that. Now, I'm doing a flip, right? So typically what I would recommend is that we record just about everything to the P&L to start, and then we think about transferring it to the balance sheet at very specific points in time. So to that end, actually, before I make this journal entry, let's go check out my chart of accounts. All right, so this is what you'll want to do too, is make sure that your chart of accounts is in a place where you're kind of ready to make these transactions. And so the first would be, do I have my cost of goods sold accounts ready to go? So when we flip a property, any expenses related to that are going to go toward my cost of goods sold. Okay, so I'm going to go through my my list of accounts here, and I've got some right here. Okay, so I got my purchase price, buying costs, so like closing costs when I buy it, holding costs, rehab costs, selling costs, and then I have my debt service. I actually choose to put my debt service down in other expense. Kind of talk about that as we go. So I have those ready to go. Now, I have the balance sheet accounts ready as well. I'm not going to use those yet, but let's just talk about them. Those are going to show up in inventory. Okay, so I want to create an inventory asset, and then I can call it like flips in progress, and then pretty much mirroring accounts for my buying costs, my debt service, my holding costs, purchase price, and rehab. there as well. So those are mirroring accounts, pretty much a one for one. Whatever I have in cost of goods sold, I'm going to have here. Now this list can change. You don't have to copy exactly what I have in the cost of goods sold or this here. It's really up to you. It's really going to be based on how do you analyze the property. So when I'm analyzing, I kind of have those categories here. And so you can do something similar, whatever your categories are. Now, the rehab, we're going to break down the rehab further into products and services. Okay, and we have a video on that separately. We will talk about it here a little bit today as well, but we have a general account here, and we're going to break that down further. Okay, so we have my accounts, we have our accounts ready. Let's go into this balance sheet and let's make this transaction. So we're going to record the purchase of property. All right, so let's do the purchase price, okay? And we're gonna debit that, exactly what the purchase price is. So I'm purchasing this for $250,000. Now here, I wanna use the projects portal. So 264 Union, I don't quite have one yet. So I'm going to create a customer 264 Union, okay? I'm gonna save that, and actually, before I do, let me get out of here. I got to make a project for it too. So that's another prep step that you'd want to take. So I don't currently have a project yet for 264 Union. I'm going to create that project. Okay, so 264 Union, flip. And then a project must be of a customer. So I'm going to make the customer 264 Union, start and end date. We can do that. I don't know the end date yet. We'll say it's in progress. So that's a prep step. And we're going to be using the projects portal here. So this 264 Union flip, I want this to populate. All right, so now let's finally make that journal entry. We know I have my chart of accounts correct, and we have our customer as well. Okay, so this is going to be my purchase price, $250,000. Here I'm going to put the flip as my customer, and if you can, it's not a bad idea to use both customer and class. You don't always have to. You can just use the project, you can just use customer, or you can just use class, but using the projects portal is really, really helpful for a flip. Now we have my buying costs. Okay, so this would be any closing costs associated with it. Now you're gonna have a closing statement that's gonna detail those out, but let's just assume for simplicity that we have $7,500 in closing cost. And again, recording to our project. Good. Okay, what else are we going to have? Now, we might have some costs at the close of our purchase that are associated with holding costs. Okay, so if you ever see that you owe some taxes or utilities at closing, that's very, very common. I would put those toward holding costs instead of buying costs. Okay, so we'll put those right here, holding costs. Let's say that, I owed some money on taxes, and you can put in the description there, taxes. We'll go here. All right. Now, let's say that I'm getting a hard money loan for this property, okay? If I'm getting a hard money loan, then I would put that as a credit. So I'm going to do hard money loan, private/hard money loans. Let's say it's from lender one, and let's say that I'm getting a total of $300,000. Okay. Now, for a balance sheet transaction like this is, I don't need to record to the to the project, and I probably don't want to. And the reason for that is that the project level only is going to grab P&L transactions, and so we don't gain much from this, and actually we keep our balance sheet simpler if we just record to our customer level. Okay, so that's our differentiation there. So I got my hard money loan of $300,000. Let's say that we are putting some of my construction funds into escrow. Okay, so let's say that they're loaning me $300,000, but $75,000 goes into construction escrow. So again, construction escrow is going to be a balance sheet, and therefore we would just want to put it to the customer, not the project. Okay, and let's also say that I owe some points on this. Okay, so I owe some debt service. All right, so let's say that I owe, maybe it's 300,000 times 0.202, a 2% points on hard money loan. Okay, now debt service, that's a P&L account, therefore we're back to using our project. Okay, and then let's just kind of say that that's it. So now the rest of the funds to close on this property are going to come from my checking account, $40,000 cash at closing. Now, for various reasons, I honestly don't like to track a checking account to a customer or class. That's a topic for a different video. It doesn't really hurt anything, but sometimes it can confuse. We're going to leave it for now just to keep things simple. Nice and easy transaction. Let's save and close, and let's see this now appear on my balance sheet and then on my P&L. So actually, I was on the projects portal to start, and you can see it populated already. So I have all of the money I spent so far, the purchase price, the buying costs, the holding costs are all showing up here, and my debt services shows down here. Okay, I'm going to come back to this in a second. Let's go back to the balance sheet. My balance sheet shouldn't really have too much on it other than I have less cash, I have a construction escrow, and I have private money loan. Now, what I can do with this balance sheet is I could distribute columns by classes and see really nice and neatly how I have it by property. Now, I only have one property so far, but my philosophy is always two-dimensional chart of accounts. I want to be able to scale. Okay, so if that's the case, we want to be using 2 dimensions here. All right, check out our video on, I think it's titled Don't Make This Mistake, about 1-dimensional versus 2-dimensional charts of accounts. All right, so we see that we have our money here. So now what we can do is we can start working on the project, okay? So let's do exactly that. Now you're gonna see that my net income shows down here, and I can drill down into that, and here's my profit and loss. And by nature, we're probably gonna start tracking our flip as a profit and loss right here. Now I haven't done any rehab yet, I'm gonna do that right now. I'm gonna use products and services, okay? Again, if you wanna check that out, we have a lot of videos on that. Products and services allows us to put these really detailed categories in for our renovation, and then what we do is we map these to our profit and loss account. Okay, so what we can do now, if I go into we'll drill down into that P&L again. Notice, by the way, if you didn't know how to do this, I'm going to a balance sheet and then I'm going to drill down into a P&L. If I want to drill down just in the P&L for that project, I can see it right here and I can boom drill down right into it. It's perfect. Okay, so let's create some rehab expenses. I'm going to go about my business of renovating this property. Now, you notice we have a construction escrow established. That means the bank, the hard money lender, is providing me some funds to do the renovation. But typically, we're going to spend that money out of our own checking account first, and then we'll get reimbursed via a draw. I'm going to show you that as well. So let's say that we make some payments. Now here, I'm going to use products and services, not category, because I'm doing my renovation. So I'm going to do like rough electrical. Okay, let's say that I spent $5,500, and here I'm going to indicate my project, and if you can, class as well. Okay, let's save and new. Let's do a few of these. All right, so I got my rough electrical, then maybe I'm moving through and I have, now I have like rough plumbing. I'm going to skip all the markup stuff for now. I should probably have turned that off. That's more of a, like, if you have a third party facing. All right, let's do some framing. Now, you're probably going to have hundreds of transactions probably, right? I'm just going to plot a few out on here just so we can see what is happening. Let's say I spent $10,500 on framing, and we'll just stop there to see where we're at. So save and close. Okay, so I've spent so far, now we can see the rehab cost populates into my P&L. So I've spent so far $22,500. So at some given point, and you're going to sort this out with your hard money lender, you're going to get a draw, okay? And where a lot of folks get confused is trying to figure out how to record that draw on your P&L. The answer is you don't put it on your P&L at all. It's all a balance sheet transaction. You're going to be doing this spending, okay? And as you do that spending, your personal account's going to go down. And this is not specified, again, topic for another video. It's not specified for some interesting accounting reasons. That's okay. But we want to get this draw over to here, okay? So as I spend money, let's say I'm spending $22,500 so far, I might request that draw from my hard money lender to say, hey, I've done some work, here's some photos, here's an inspection potentially, I want to have that money come into my account. You could deal with that with a journal entry, or you could do a deposit. Either one will work. Typically, that's going to just kind of even just come through your banking transactions. So this banking transaction is going to be pretty ugly, so this wouldn't be the case. But like, let's say this $88,000, or let's say this $29,000 was a draw. We could just go into it and say categorize. And where did the money come from? Came from construction escrow for this property, and that would flow in perfectly. Now this date's going to throw things off, so I'm going to do this manually. I'm going to do a bank deposit as of like 12/1/2018. All right, received from could be your private lender's name. I'm just going to leave that blank for now. Let's go. Construction escrow is the account that it's coming from. The amount is, let's say it's $22,500, and the class 264 union. Okay, so this is a reason why I like using class and customer. If I was only using customer, I'd need to indicate the customer or the project here, okay, which you can do, but it removes the ability for you to put in the vendor there. You would have to instead use a journal entry to do it. Even a journal entry, you only have the one column. So that's why if you can use class, it's not a bad idea, because I'd rather be able to say like, you know, here's the vendor, you know, as opposed to always having it here. But you can do this. It's fine. Because it's a balance sheet transaction, there's not much value in adding the project. Therefore, I'm just going to keep the total. All right, did I do that as of the perfect date? Let's see, did I do it a good date? Yes, I did. Okay, so now let's go over back to my balance sheet. I should see now that my construction escrow has depreciated or gone down. Now, one thing I probably messed up, you guys might have caught this. Oh no, I got it right there, JMB checking. Okay. So I should then see my JMB checking. Yep, okay. There we go, looking good. Okay, so now if I were to do my columns by classes, I see that my escrow account is $52,500. My private money loan hasn't changed. I have these contributions here as well. All right, we're just gonna do a couple more transactions here. Let's go back to my projects portal, see how that's looking, my 264 Union flip. Okay, notice that the construction escrow doesn't touch this at all, and it shouldn't. I'm spending money out of my own account for the rehab costs. I'm just getting reimbursed. That's a balance sheet transaction. Okay, nothing to do there. Now, one reason that I put flips as debt service here is because when I do a P&L for this, okay, let's say that I have a partner, okay? I might have a partner in this, and if I have a partner, maybe the partner doesn't take on the debt service or doesn't have the responsibility for the debt service, and therefore, whatever my net income is, I might be splitting at this level as opposed to this level down here. So it's not a bad idea to separate out debt service in the event that only one or some of the partners are responsible for it. We don't necessarily want it to hinder or to manipulate our total net income. So it's not a bad idea to put it down here. If you're just doing all this by yourself, then you might want to put it up there. It's not a bad concept though to have debt service separate, because then you can see like how would I do on this project if I didn't need to take out financing, right? What would be my cash on cash return? Okay, so we're moving along, and at this point in time, let's say that we're getting to the end of the year and I've spent this much money, but I haven't sold it yet. Okay, so if I were to look at my business as a whole and just look at a profit and loss, and I got to switch it to 2018. So if I'm at like the end of 2018 and I say, all right, let's prep my taxes. I haven't sold that property yet. And I prepare my P&L, I show a negative $287,500. Okay, now that says that my business is doing really poorly. Now, you and I know that this is an investment and that this property is on my books and it's gone up in value. Probably it's gone up in value more than $287,500, okay? But we're not going to capture that added market value, okay? Not yet anyways. So how do we either mid-year to make our books not look so bad, or at the end of the year to prep for taxes, how do we get this moved over from our P&L to our balance sheet without messing up the profitability of the project? And this is a transaction that I teach all the time to do at the end of the year, or you can do it even monthly, okay? It's kind of up to you how you want to do it. I'm going to do it just at the end of the year. We could do it monthly, though, if we wanted to. So what you need to do is you need to take a snapshot of that P&L for that project at the time that you're going to make that transfer. In this case, we're going to pretend it's the end of 2018. Now, I can look at that P&L like I just did here, or I can go to my projects. I can see that 264 Union flip. Okay, so I got that P&L shows up right here. And maybe like take a snapshot of this, put it somewhere. Okay, so I'm going to put this on my other screen so I can reference it. Okay, and what we're going to do is we're going to move this over from the P&L to the balance sheet. Now, you saw it's on the project there. I'm going to demonstrate this from the balance sheet. So where does my net income show up on the balance sheet? It shows up right down here, that negative $287,500. Okay, now I can customize this. I can filter this down to be just my class. In this case, I have no other transactions in here, so this won't change too much. But filtering it down would be helpful. All right, I want to get this out of my negative net income and I want it to show up somewhere in assets. So I'm going to do a journal entry to do that move. All right, so we're going to do this as of 12/31/2018, the very last day of the year. And basically, I need to zero out all those accounts that show up in the P&L. So that's my purchase price. That is my buying costs. That is my holding costs, my rehab costs, and my debt service. Now, I probably would have been making mortgage payments, maybe interest-only payments to my loan. I might have been making probably tax and insurance payments as well to like increase some of these accounts. But basically what we're going to do is just take whatever the balance is as of 12/31/2018, okay? And that balance is right here. It's whatever I spent so far, okay? So we're going to credit all these to get them to zero, okay? So for my purchase price, I have $250,000. Buying costs, I have $7,500. Holding costs, $1,500. Rehab costs, $22,500. And debt service, I have $6,000. Okay, now where are we going to put all that? We're going to put it into my inventory items that we looked at the very start of this video. So my purchase price is a sub-account of flips in progress. I got my purchase price, I got my buying costs, I've got my holding costs, all flips in progress, right? I got my rehab costs, debt service. Okay, and we're just going to mirror this over here. So $250,000. I'm just transferring it from the P&L to the balance sheet. Accountants love this, by the way, because they don't want you to take that deduction yet. You shouldn't. You should wait till that project is completely finished. So that way you can see the project as a whole. Okay, so there we have it. Now, when I make that move, for class, we're going to put in 264 union for everything. Okay. And here is the other thing we're going to do is we're going to just use customer. What's cool about that is it's going to leave our project 100% pristine, meaning I can still see a P&L on my project level. Okay. So here, I'm just going to put the customer. I'm not putting the project because this is a balance sheet transaction. Now, QuickBooks does not yet have the ability to like click and drag this down, which is annoying. So you got to put this in all the way down. So what we're going to see now is hopefully that 287 moves from my P&L to my balance sheet. Okay. Let's save and close and see what happens. I'm on my balance sheet. There you see my flips in progress populates. You might want to order these differently. I wish I had done that. Okay, but there's that 287.5 now shows up in my balance sheet and it's removed from my net income. However, if we go to our projects, here's where we kind of get the best of both worlds. Because I didn't indicate the project on my journal entry, it still shows up here nice and neat. So I can still, like, even if I move things to my balance sheet, I can still see within my project how much I've spent. That's why some of my students like to do this exact transaction, the one that I did with the balance sheet, like to do it like every month. Because if they're trying to look as a business owner at their P&L and they keep seeing this gigantic negative because we have so many flips in progress, it really skews how they're doing in their business. And QuickBooks, first and foremost, is there for you as a business owner or a bookkeeper for a business owner to understand where the business is at and what key decisions can help drive that business forward. All right. So now what happens the next year? You have two choices. You can either leave everything here and it won't hurt anything at all, or we can move it back to the P&L as of the first of the next year. Okay. So it really depends on how you like to see it. If you want it to be on the balance sheet so that it doesn't skew your net income, just leave it here and then start tracking to your P&L and then do, monthly moves. Or if you want it to all go back to your P&L, simply move it back there as of 1/1/2000 the next year, in this case 2019. So do that. I can just click reverse and it's going to create a separate journal entry and it actually moves it forward to 1/1/2019. I save and close that. And now my balance sheet, if I fast forward one more day to 2019, it zeroes out everything and it's back to the net income. Now this now includes some other stuff. I think I gotta filter it by class. 264 union. Yep, there we go. All right, let me save this customization. All right, so now we can keep working on the flip and then we can eventually sell the property. All right. Now, when we sell the property, if everything's in our P&L, the sale of the property is super easy. We just record it all as a P&L transaction. If we have basis here, we're gonna take the sales price minus our basis is our revenue. All right. So we've moved it back over here. So we're tracking everything to our P&L. So if we were to record a sale, like 2/1/2019. Now I know I have plenty more rehab that I didn't do and all that stuff, but let's just say that I sold it. Sales price of my flip. Let's see. Maybe it's selling. Flips selling price. Yep. So whatever you sold it for, let's just say like $350. Okay, there's my selling price. And then I probably have selling costs, right? So this would show up on your statement. You'd probably have, $350 times 6%. Let's actually say I sold it for more. I kind of want to make this look profitable. So let's say 400 times 6% so that's 24,000 is realtor commission. So that's selling costs again to this exact flip. Now I have that loan, that hard money loan needs to go to zero. Okay, so that hard money loan for private lender 1 needs to debit 300,000. But I had some money in my construction escrow. I kind of forget how much it was. I think it was 75 minus 22,500. I think I had 52,500. So I needed that to go to zero as well. Again, customer for the balance sheet transaction. All right. And then what else would we have? We'd probably have some debt service, probably owe some money on this private lending. Okay. So we have some debt service as well. Let's say that we owed another $6,000 for that. That goes to the project. And then the rest of the money after we're done with all the closing costs and all that stuff, actually, let's say just a little bit more in selling costs because that's typically what happens. We have not only the realtor fees, but we also have like another $2,500 and some kind of transfer tax or something. You're going to have that, again, this isn't a video on sales, but that's how that would go. You post the attachment here. Okay, now the rest, the very final line is your cash at closing. So there's my $120,000 I get at closing. And then when I kind of round this out, we'll save and close. We can see that, let's see. Just looking at this, 75,000. My construction escrow somehow didn't go, but I'll handle that in a second. Oh, because it's 1/1/2000. I just got to get my sales price right. Okay, so I sold in 2/1/2019. So all I need to do with this, my apologies, I got to go to this balance sheet for 264 Union, and this has to go through that next year. There we go. Now everything's zeroed out. So I've zeroed out my private money loan. I've zeroed out my construction escrow. My flips in progress has been zeroed out. And there's my profitability, the 80,000. Okay, I'm just going to save this one more time. So that profitability should match what shows up in my project. Okay, so if I go to 264 Union, there's my $400,000 income minus the cost, and there's the profit there. Okay, now if I never moved over, if I never did that transaction to move from the balance sheet. So if I didn't on 1/1/2019 move everything over, All right, so I can delete that. I'll show you what I mean. If I just kept it there, then as of my sales date, as of 2/1, what I need to do on that sale is I need to zero these out at that sale point. Okay, so what I would need to do is on this exact transaction, my sales price is no longer 400,000. Now it's 400,000 minus the 287,500, and then I would have, the purchase price that I would credit, buying costs that I would credit, etc. We're not going to do that here. All right. So understanding moving between your profit and loss and your balance sheet is essential for these flips. Okay, it's absolutely something that you need to know how to do. So I'm just going to put this back so that we understand. Reverse it for 1/1. Good. Okay, so and being comfortable with that transaction is important too. What's cool about that is once you do it once, let's say you're doing it monthly, you can just go in and copy it. Okay, so if you did it for 1 month and you need to do it again, just copy it, change the date to be like the next month, and then change the amounts, and you can just move it over. All right. Again, really common question I get. We dive deeper into these details in our real estate accounting bootcamp. Check it out. Also check out the free course we have available, QBO Mini Camp. We're giving away a ton of value for free there. A lot of good free resources available at incomedigs.com. That rehab analyzer is there, and then a lot of supplemental videos on all the stuff we talked about here. Almost all is available for free. So check it out. Let me know if you have any questions. Throw them in the comments. I'm monitoring it regularly, and I will see you on the next video.